Hello friends, welcome back. Today we are going to look at a fund that pays more than 10 monthly dividends. The ticker is called MSTY. What makes this special is not just the fact that it's paying monthly dividends, but also that it has a very low expense ratio and its sector allocation has been beating the market. If we go to the website of MarketWatch.com and type in the ticker symbol, then we can see some key information. The expense ratio is only 0.3%. That means for every $1,000 you invest, you will pay only $3 in fees to the fund manager. This is very low compared to other funds out there. The fund has an A rating from S&P, which means it has strong performance and low volatility. It has a 5-year return of almost 16%, and it has a dividend yield of 9.24%. That means if you invest $10,000 into this fund, you will receive around $924 per year in dividends. So with this fund, you get great returns, low fees, and a high yield. Now let's check out the holdings of this fund. We can see that it invests in equity, primarily in large cap stocks. It has 98% of its assets in equity. There are 198 stocks in the portfolio. The top sector is technology, followed by consumer, cyclical, and healthcare. If we compare this to the benchmark index, which is the MSCI US Broad Market Index, we can see that there are some key differences. For example, the benchmark has around 18% exposure to the financial sector, but the fund only has 5% exposure to financials. Instead, the fund has a higher allocation to technology and consumer discretionary. This different allocation has been the reason why the fund has been able to beat the benchmark over the long run. Now, let's have a look at the monthly dividends. You can see that the fund pays monthly dividends every month. It's not a bad amount either. In December 2022, the fund paid 19 cents per share. Now what's interesting is that if you look at the stock price, it has been consistently going up. The stock price in January was around $15, but now it's trading close to $19. This means that the price has increased by more than 25% in 1 year, and during this time, the fund has been paying monthly dividends. So if you had invested in this fund last year, you would have received a good return on your investment. Plus, you would have received monthly dividends. The way the fund generates these returns is by investing in companies that have a strong growth potential. Most of the companies in the portfolio are growing at a rate of more than 10% per year. Take Apple, for example. It's the biggest position in the portfolio, and it's growing at a rate of 13% per year. Another example is Microsoft. It's the second largest holding, and it's growing at a rate of 15% per year. These companies are leaders in their respective industries, and they have a strong competitive advantage. They have a strong balance sheet, and they generate a lot of cash flow. All of these factors make them attractive investments. Now what's interesting is that even though the fund has a high yield, it's still considered to be a low-risk investment. This is because the fund invests in a diversified portfolio of blue-chip stocks. These stocks are very stable, and they have a low beta. Beta is a measure of how volatile a stock is. The lower the beta, the lower the risk. The beta of the fund is only 0.92. That means the fund is only slightly more volatile than the market. This makes it a good choice for investors who are looking for a low-risk investment. Overall, I think that MSTY is a great choice for investors who are looking for a monthly dividend ETF. It has a low expense ratio, a high yield, and a good track record of performance. Plus, it invests in a diversified portfolio of blue-chip stocks. However, it's important to remember that past performance is not indicative of future results, so be sure to do your own research before investing. That's all for today. Thanks for watching.